everyone, we're having a massive event right now. The stock market is booming right now because CPI came in slightly lower than expectations. Expectations were 3.3% year over year, and we had 3.2. So we're going to be doing a few things today. First, I just want to break down exactly what happened. We're going to be watching a short CNBC video. After that, we're going to be going into some of the data as far as CPI and what it looks like going forward. And then we're going to be checking out the chart so you guys can see what's happening with the Dow, NASDAQ, S&P, Bitcoin, Ethereum, so you guys can make some informed decisions because all of them are doing something completely different. Thanks. All right, to start things off, let's hit the video.
October read on our consumer price index. Month over month headline expected up 1/10 comes in at 0, unchanged 0, which equals the lowest we've seen on this metric since we hit our high at 1.2. That was in June of 22. That was the highest since 05. So 0 ties. That's the lowest we've been. And if you strip out the all-important food and energy, it's up 0.2. That's 1/10 cooler both than expectations and the rear view mirror. Year over year headline up 3.2%.
There you go, 3.2.
Lighter than expectations. 0.5% less than the 3.7 look last time. 3.2, just to put a face on it. 3.0 in June of this year was the lowest since March of 21. So we're still above that level. And finally, what I would consider potentially the most important, even though it's ex-food and energy, is year over year CPI. 4%, 1/10 lighter than we were expecting, 1/10 lighter than our last look, which was 4.1. And the metric there, and this is a biggie, we haven't been under 4% since May of 2021. Yes, under 4% since.
Okay, so you guys get the gist of what's happening there. Good news all around. You see the market's kind of having a booming moment here. But here's a few things we should understand, okay? First of all, the market is going up. Dow's up 574 points as of this video. S&P's up 2%, NASDAQ almost 2.5%, and the Russell 2000 up around 5%. That is massive, guys. That is massive. And the reason is this. We did have a little bit of a slowdown in July as far as inflation continuing to come down, but it looks like we're moderating a little bit now, and this kind of looks like, okay, when maybe we're not going to spike back up and do a V formation, which has been normal here. You can see in the 60s, 70s, 80s, we had a lot of peaks and valleys where inflation was getting hot, hot, hot. It looks like we may at least go a little bit more sideways for now. We'll see if things go up in the future. But so far, inflation looking good, and the overall market is kind of agreeing with that. You've seen this week a massive breakout on the Dow Jones. We haven't had a large breakout like this in quite a bit of time, although the last one didn't really do much. This one is looking a little bit healthier, especially because we are breaking above some moving averages, and it's postponing some of those death crosses that we've been talking about. The NASDAQ's a little bit more sexy, I guess you would say. We did have that crash back down here to support levels, but this is closer to all-time highs. The NASDAQ's kind of in a little bit of denial. It looks like we are going into bubble territory again, but at the end of the day, whenever the bubble pops, it pops. You're going to ride that wave until it actually comes, until it breaks apart. That's frankly what you have to do. You see the breakout that happened a while ago. The breakout's still working in our favor. Even going over here to the SPY, officially just broke out today. So you're probably going to see more upside here, at least into the 450s, and then you might see a little bit more of a turnaround. Now, all of that's still very, very bullish. Getting a little bit overbought territory, of course, but that's why all I would say is for you guys, just look to trade some of these moving averages. It'll help you guys out a lot. This one, wow, this thing that popped up around 5:30 as the data came out, and it's just been taking off ever since. I don't know why I have my pre-market colors not on there, but really, break it right there, and you ride that wave. That's the best way to do it. I would not be buying now if you guys are looking for day trades, but overall, it's in a really good spot. Bitcoin, on the other hand, enjoyed the news this morning, but then it came right back down because Bitcoin's in a pretty nasty downtrend at the moment, getting rejected from this level of resistance. I told you guys just to watch out for some of these moving averages, like the 20 on the daily and the 4-hour. We did unfortunately break down below that 20 moving average on the 4-hour, and you've seen we've actually come down quite a bit. On the daily, though, we still have some time. You really don't want to see us flush out below 35,000 or just this 20-day moving average. That's going to lead to some bad stuff. Oscillators are a lot more bearish, as I've been telling you guys over the past few days. If you guys are really concerned about Bitcoin in your overall positions, you just don't want to see Bitcoin break back down here below 33,412. We're very far away from that right now. So just watch some of these order blocks around here, close to around $34,000, a little bit above that, and you guys should be fine. Ethereum, overall, still staying steady, broke out, holding that breakout. Again, it could flush back down, but it'll flush back down with Bitcoin if you ask me. Last thing here is, as far as rates are concerned, you guys are seeing rates fall off of a cliff today, heading back down to a previous level of support. I'm getting more excited about rates coming back down. The economy is going to continue to get worse. The stock market will go up as the economy goes worse because of what's happening with inflation. I don't think we're looking at a reverse market explosion with rates coming back down as long as the economy stays somewhat strong. But there's going to be a huge battle next year, everybody. Or everybody is going to be trying to force Jerome Powell, or everybody on the government side right now, is going to be trying to force Jerome Powell to cut rates early. If he does that, inflation will soar. If he doesn't, we'll have a recession most likely, but at least inflation will be manageable and we can try to dig ourselves out of this hole, which is going to be hard enough as it is. But let me know if you guys have any questions or comments based on all this stuff. We're looking at a pretty crazy cycle coming up, and this is making me very, very excited for 2024, because as all of this starts to fall apart, as far as bonds and things like that, that's a huge catalyst for cryptocurrencies and the stock market, except for the stock market is going to have to deal with earnings, and earnings haven't been good at all, but the market still goes up. There's a real big sense of denial going on there right now, which is going to be very interesting to watch.